We'll now be starting with chapter 9, which is all about accounts of companies. Now, why are we dealing with it? Obviously, because you are into chartered accountancy course, which is all about accounts. So, you need to know where are the laws written with respect to accounts. Everybody must have told you. You have to write in this format only, or this is how you are supposed to do. Things like that, right? So, where does it come from? It all comes from Companies Act. So, what are we going to learn over here? The learning outcomes of this particular chapter are, first of all, you should know how to prepare and maintain the books of accounts of the company. Then you are supposed to prepare and file the financial statement and other related, which you must have done practically also, very likely. Suppose something is wrong or the government wishes you to do it, then you may have to reopen and revise your financial statement. There's something called the National Financial Reporting Authority, whose constitution, working, and power will have to be discussed. Then all about corporate social responsibility and internal audit of companies. This is going to be the coverage in this chapter. We'll introduce this subject to you by saying that basically why are accounts there? Because you need to disclose details to the shareholders. Why? Because they have put the money in the company. So annually, it is a requirement that you need to disclose to your shareholders certain details. What? The financial position of the company. Now, books of accounts to be kept by a company comes under section 128 of the Companies Act and says it talks about certain things which need to be kept, that books of account, books and papers, financial statements are to be kept at the registered office of the company or at some other place, but there are certain norms for that. It is open for inspection by the directors and it is to be preserved for a period of 8 years. In case a company does not comply with this, then the company will be under fine, but the person who is responsible, every officer in default, can be punished with imprisonment up to 1 year, fine of 50,000 rupees, 50 lakhs, or both. What is the general requirement? General requirement is that every company has to prepare books and certain other documents as specified. Why it is required? Because it is what is required in that books. It has to give a true and fair view of the state of affairs of the company, including that of its branch officers. What is the basis? Accrual basis and double entry system of accounting. Cash basis or single entry is not allowed. Accrual basis means what? It is a accounting assumption, isn't it? Or accounting concept. That means what you earn today, you will account for. What you are supposed to pay in the future, that also you will account for. You are supposed to pay or you are supposed to receive, as the case may be. So it's an assumption. Also, double entry system when you're talking about, it means there is every entry will have dual aspects. There is a debit and there is a credit. Books of accounts which are supposed to maintain what it should contain, that is also defined. It says money received and expended, all the sales and purchases of the company, assets and liabilities of the company, and where applicable, you have to maintain items of cost under section 148. Further, books and papers or book or paper is defined under section 2 subsection 12. It says it includes, remember it's an inclusive definition, meaning more things could be added. Books of account, deeds, vouchers, writings, documents, minutes, registers, everything is included in the term books and paper, which is either maintained on paper form or in electronic form. Accrual basis means what? It is a accounting assumption, isn't it? Or accounting concept. That means what you earn today, you will account for. What you are supposed to pay in the future, that also you will account for. You are supposed to pay or you are supposed to receive, as the case may be. So it's an assumption. Also, double entry system when you're talking about, it means there is every entry will have dual aspects. There is a debit and there is a credit. Books of accounts which are supposed to maintain what it should contain, that is also defined. It says money received and expended, all the sales and purchases of the company, assets and liabilities of the company, and where applicable, you have to maintain items of cost under section 148. Further, books and papers or book or paper is defined under section 2 subsection 12. It says It includes, remember it's an inclusive definition, meaning more things could be added. Books of account, deeds, vouchers, writings, documents, minutes, registers, everything is included in the term books and paper, which is either maintained on paper form or in electronic form. Now the question that will arise in your mind is, where are you supposed to keep the books of account? It should be kept at the registered office of the company. However, you can keep it elsewhere. You need to inform the ROC within 7 days of the date of the board's decision. That is the resolution passed by the board, and you have to submit that in form AOC 5. Now, the maintenance of books of accounts can be in electronic form also. However, certain conditions have to be met. What are those conditions? One is that it should remain accessible in India and it should be usable in India. You can't have it in formats or in a place where you can't access it from India. Second, it should be written completely in the same way as it was originally generated, not a converted version. Generated, sent or received. Thirdly, information received from branch offices should not be altered. What is the fourth point? The fourth point is saying that it should be capable of being displayed in a legible form. There should be a proper system whereby you can store, retrieve, display or print out electronic records. It should not be disposed of or put away in such a place that it is unusable unless the law requires so. And finally, backup should be kept in servers physically located in India and it should be taken on a periodic basis. So many conditions have to be met if you want to maintain it in electronic form. Also, it says a company has to intimate the ROC certain requirements with respect to maintenance in electronic form on an annual basis. When they have to do at the time of filing of financial statement. What they have to give? The name of the service provider, internet protocol address of the IP address of the service provider. Thirdly, where the service provider is located. And fourthly, where the books of accounts and other books of papers are maintained on a cloud, the address as provided by the service provider. So all of that must be given. What about books of account of the branch office? Transactions effected at the branch office, they can be kept at the branch office. Very logical. And it says that summarized returns have to be sent periodically by the branch to the company at its registered office or whatever other place as decided by the board of directors. Can the directors inspect? Yes. When? During business hours. What can they inspect? Books of accounts and other books and papers. Directors of the company can inspect the books of accounts of a subsidiary only on authorization by way of resolution of the board of directors. So, if it is of the subsidiary, then they can do so only on authorization. If it is of their own company, they can do so during business hours. Where any other financial information is maintained outside the country is required by the director, director has to furnish a request to the company and then they have to give full details of the information sought and the period for which such information is sought, and then the information has to be provided within 15 days. Director can seek only individually and through attorney holder or agent or representative. What is the period for which you need to keep these books? It is 8 years. If an investigation is ordered by the central government under company law, then the central government may order it to be kept for a longer period of time. Now, next logical question is, who is responsible for the preservation of these books? One is the managing director. Whole-time director in charge of finance, what we call colloquially as finance director. Third is the CFO, the chief financial officer. Any other person who may be charged with the responsibility of complying with these provisions is also equally responsible. Now the question is, if any of these four do not maintain it as required, then what is the punishment? Punishable with imprisonment or fines or both. Now, what do we mean by financial statement? That also we need to know. As per the law, it's section 2, subsection 40 includes the following as your financial statement. Which ones? Balance sheet, P&L account or income and expenditure account. Then we have the cash flow statement, statement of change in equity, any other explanatory notes which are annexed to or forming part of the financial statement. When it has to be prepared, it has to be prepared for that financial year in a particular format which is given in Schedule 3. Now, Schedule 3 has been amended on 6th April 2016, which you need to know. So division into Division 1 and Division 2. Division 1 deals with financial statements for a company whose financial statements are required to be in compliance with company's accounting standards rules of 2006. And Division 2 is for those companies whose financial statements are drawn in compliance with company's Indian accounting standards rules of 2015. Basically, what is financial statement? Therefore, it has to give a true and fair view. And it is not applicable to banking company, insurance company, electricity generation or supply companies or company governed by any other law. Further, what you have to do once you make these financial statements, it has to be placed before the annual general meeting of that financial year. So let's say your financial year ends on 31st March of a particular year, let's say 2016. Then in the annual general meeting, which falls within a period of 6 months, that is by before 30th September, you're supposed to lay it before that annual general meeting. What about subsidiary companies? The company which is having these subsidiaries has to prepare a consolidated financial statement of the company and of all its subsidiaries and lay it before the annual general meeting. They have to also attach along with this financial statement a separate statement containing salient features of financial statements of a subsidiary in a particular format, which is form AOC 1. For the purpose of consolidated financial statement, subsidiary also includes a term subsidiary, includes associate companies and joint venture companies also. The central government has the power to exempt any class of companies from this requirement. Exemption is already there for wholly owned subsidiaries or partially owned subsidiaries, non-listed companies, ultimate or intermediate holding company. Provisions for consolidated financial statements, that is what format, how it has to be done. Everything is similar to every other kind of company. If there is any contravention of any of these provisions, again imprisonment or fine or both to managing director, whole-time director in charge of finance, CFO, any other person charged with the responsibility of having these statements kept in place. I talked to you about reopening of the accounts, right? When will you do it? It could be on either a court's order or it could be on tribunal's order. Section 130 talks about it. It says that you may be ordered to open the books and recast the accounts. When will that happen? When an application is made by the central government or SEBI or IT authorities or any other statutory regulatory authority or any other person. To whom it is made, to the court or to the tribunal. What is the basis for making this application? That is, when will this application be accepted by this court or tribunal? Only if the basis is that it has been prepared in a fraudulent manner or the affairs of the company has been mismanaged. So if that happens, a notice has to be served to all the applicants and then they have to take the representation of these applicants into consideration and then the passing of the order will happen to revise or recast. Revised accounts, however, will be final. No further revision will be allowed. The next logical question therefore is, okay, compulsorily you may be ordered to revise, but can I do so voluntarily? The answer is yes. When under section 131 it says, if it appears to the directors that the financial statements or the report of the board of directors do not comply with the provisions of the Companies Act, section 129 or section 134, then they may prepare revised statements for the last 3 preceding years after approval of the tribunal. Copy of the tribunal's order has to be filed with the ROC and tribunal has to also give notice to the central government and IT and take into account whatever representations come from them. This will be allowed to be revised only once in a financial year. What is the limits of revisions? Where copies of the previous financial statements or reports have already been sent out to the members or delivered to the registrar or laid before the company in a general meeting, what you can revise, that is what we are going to talk about. The correction in respect of which the financial statement or report is not complying, only that much you can revise and you can make the necessary consequential alterations. Nothing beyond that. And central government can make the rules for this purpose. Alright. Now, if you're clear on this, let us go to the next point. We mentioned in passing that there is something called a National Financial Reporting Authority. Earlier, we had National Advisory Committee on Accounting Standards, which is NACAS. Under Section 132, central government is allowed to form a committee for recommendations on accounting standards, which is NACAS. Now it is being renamed as NFRA. Central government can also prescribe the accounting standards. We have talked about accounting standards. Now we are seeing how it is done. Section 133 says it is to be recommended by the ICAI. And till date, there are Companies Accounting Standards Rules of 2006, Companies Accounting Standards Rules of 2006, which is amended on 30th March 2016. Then Companies Indian Accounting Standards Rules of 2015 and the amendments thereto. Financial statements. Who's supposed to sign? Either we call it authentication technically, and it says that a chairperson of the company where is authorized by the board, or by two directors out of which one should be managing director and the other should be the chief executive officer if he is director in the company. The third is the chief financial officer wherever he is appointed, and the fourth is the company secretary wherever appointed. So all the four are required to sign. What about one-person company? One-person company, the financial statement should be signed by only one director for submission to the auditor for its report. Auditor's report should be attached to every financial statement. And a signed copy of every financial statement, including CFS, your consolidated financial statement, should be issued, circulated or published along with a copy of any notes annexed thereto, the auditor's report as well as the board's report. Now we look at the board's report. What is this board's report? The accounts go to the auditor for their audit, right? And then they will give a report thereon. Auditors may make certain statements. Subsequent to getting the statement, the board is supposed to meet and then they are supposed to discuss it and then finalize their report. What is it based on? It is based on only standalone financial statements. The subsidiaries accounts and all will not be taken into consideration. However, there will be a separate section in it wherein a report on the performance and financial position of each of the subsidiaries is presented and approved by the board of directors before they are signed and submitted to the auditors for their report. Auditor's report is required to be attached to every financial statement, and a report of the board of directors would contain certain specified matters. Like what? Like it will give you a statement briefly of what is the operating results, dividend, recommendation of dividend. It will talk to you about director's responsibility statement. It will talk to you about employees beyond a particular limit of salary, etc. So there's a huge list given to you which you're supposed to remember. So I'm displaying that for you. Next logical question is, what do I do about board's report in case of OPC? In case of OPC also, report of board of directors have to be attached to the financial statement. It will mean a report containing explanation or comments by the board on every qualification, reservation, or adverse remark or disclaimer made by the auditor in his report. There is something called a director's responsibility statement which I mentioned in passing. What does it really contain? It gives a declaration by the director saying that we have complied with or we have followed applicable accounting standards have been followed along with reasons for their material departures. We have applied consistent accounting policies so as to give a true and fair view of the state of affairs in the accounts. We have taken proper and sufficient care for maintenance of adequate accounting records. We have prepared the accounts on a going concern basis. If it is a listed company, they have to also declare that they have laid down internal financial controls which are required to be followed by the company. Directors have to also certify that they have devised proper systems to ensure compliance of all applicable laws. Who signs the director's report? Chairperson of the company is authorized by the board. Where he is not so authorized, any two directors, at least two directors of the company, one of whom shall be managing director, or if there is only one director, then by that director. Contravention of any of these provisions, there are some penalties for that which are being displayed for your perusal.